Now let's get to Aquiles Larrea, founder and CEO of Larrea Wealth Management. He has a slew of stock picks for us in all these different sectors, and we've had volatility, but guess what I'm watching, Aquiles? Right now, the Dow Jones Industrial Average is down just 20 points. So I'm going to watch to see whether it goes into positive territory here, because we just had some headlines from the White House, which really brought the move here since the show has started, right? It was down over 200 points, the Dow a short time ago, and now we see it down just 18. So how do you feel about these volatile markets?
These volatile markets are a great opportunity for stocks that have been laggards, for the most part, to go up and participate in this rally. I mean, we have such defensive names out there that really, I mean, they participated, but they haven't been on top with the other stocks like the techs and the like. In the manufacturing sector, in defensive like UTX, we're going to talk about, but just wonderful areas to be in.
I know you have a slew of stock picks. Can we check in? I wanted to ask you, last time you were on, you mentioned some of the banks. You mentioned like Key Bank and then Barclays and UBS and Bank of America. This group is obviously very tied into what's happening with interest rates. It's been the beaten down group. People pick it often as a great opportunity. Do you still see the opportunity in that group?
That's a great question. It's absolutely still a great opportunity. They are going to get beaten back a little bit, of course, with the Fed decision and the China and the escalation in the China trade war, but absolutely.
So you still like them
there. Yeah.
How about United Technology and also Coca-Cola? Those are some of your picks that you had. Why do you like those?
You know, the funny thing about United Technology is no matter what the situation, we still have a war going on. They're so embedded in defense, in technology, and like space exploration as well. So they're going to do well no matter what. They're not going to be as volatile as the other stocks. Coca-Cola is another great name where
these are both Dow components also.
Yeah.
I mean, so they're big, you know, here's UTX, right? United Technologies, which is higher today by 1/4%, and good old Coca-Cola. Your thoughts?
Solid stocks, great dividends. I mean, they're ranging anywhere between 1.7 to 3%, and great holdings. The dividends are great. The thing that you want to watch with these stocks is their diversity of income. They have so many different companies in their conglomerates. They can make money anywhere from those incomes.
Right, and you're not concerned about the international part of Coca-Cola. I mean, they have so much exposure to the other countries that are seeing slower growth.
Well, there's a lot of companies in the same boat, but at the same time, they have plenty of domestic interests to counteract that.
How about today we're watching oil, the commodity itself was moving higher, had a nice move to the upside for oil, but you have actually an energy pick, right? I mean, this is a group that some people have been frustrated as investors because some of the stocks haven't really performed as well as the S&P 500, but the commodity itself, oil's moving higher, and Dominion Energy D is your pick.
Dominion's an interesting company because we got a solid dividend. Most utilities have decent dividends, anywhere between the 4 and 5% range.
Right.
But Dominion's interesting that we can pick up some even more growth there. Yes, they have the debt part of their balance sheet, as other utilities do. That's a big part. But I see a lot of growth on that front, and it could be a very interesting play, especially to protect your portfolio in this environment where it's really wacky right now.
All right, and then what about Aflac? Don't do the duck sound.
I'm not gonna do that.
But I do recall when the duck ran around on the floor of the New York Stock Exchange and they gave him a private bathroom.
Oh my God.
No men were allowed to use that bathroom that day. But Aflac's an interesting company, and it's one that you like a lot. Why?
Yeah, you know, once again, great dividend yield, has not participated as much in this market rally beforehand, and it is defensive in the sense that most insurance companies are defensive. You know, we've been looking at the sector a while.
Right.
We feel it's at a level, my firm believes it's at a level that we think it's going to go up. We're looking for a 6 to 7% move on the upside by second quarter 2020.
Oh, okay. So that's not a huge move between now and then.
For an insurance company, it is.
I guess. And it's better than bond yields, which obviously are are minimal at best, but you actually like some of the bond ETFs. You have two names in exchange-traded funds that you're recommending a way to get involved with bonds.
Absolutely. The thing you have to remember, the S&P right now, just on a different side note, the S&P itself has 58% of the stocks in the S&P trade better in terms of dividend yield than the actual, the Treasury, which is what, 1.6,
1.7 today.
Okay, well, it was 1.6 when I saw it the last time. But the thing to remember with these type scenarios is you're looking at like AGG or a long-term investment yield grade like ILQD. We're looking 2 to 3% on the dividend side and very defensive to pad your portfolio in these volatile markets so they can be a solid play to really protect yourself. I really believe that.
Right, ILQD and AGG. So these are the ways to get in there. Your last thought on the market overall, I mean, when people are invested and they see all these headlines, what do you think happens with China? What do you think happens with the Fed? And what are you most positive about?
Well, I'm taking out my crystal ball right now. But
you got to be quick. Go.
The Fed, they're going to probably be forced into another rate cut sometime late fall, I'm thinking. China, if Trump has indicated they're not going to have any sort of deal right now, they're going to have to work something out, but it's not going to happen, I don't think, anytime soon. So they're digging their heels, and so are we. So we could see some more volatility in this market. I really believe that towards the end of the year, we could see anywhere a downward trend, anywhere from 3 to 4%.
I see. Is there some? And what are you most positive about?
All the stock sector with the good dividends and the fact that dividends are being raised on a lot of companies, including Coca-Cola.
Right. Okay. Aquiles Larrea, founder and CEO of Larrea Wealth Management.